Hi, everyone. Welcome to another uLaw webinar. We're very excited to have you here. Today's topic is Disbursements Demystified. I want to let you know that this topic is certified for 1 hour of Law Society LSO CPD credits. It's also certified in the province of New Brunswick and British Columbia as well. LBC and New Brunswick have also certified it. So all you do is after the webinar, you can basically go back to the email that we sent you, answer the survey and record your attendance, and also give us a feedback. And then you can go back to the LSUC or the LBC portal, and the webinar is called Disbursements Demystified, and you can get your 1 hour of CPD credits. If you have any problem listening to the audio, please let us know. You can also use the chat lines, to let us know how we are doing. So I'll get on to the the topic of disbursements. But first, some housekeeping. We do webinars every Friday at 2 p.m. and we also ensure that, we clearly mark them whether they're available or not. Okay, so you can look at them and then join them. So the agenda for today is we'll go into the details of what disbursement is, how do you manage them. We'll talk about managing disbursements right from trust account. What are some of the benefits of doing it? We'll also show you how to manage disbursements from general account, business credit card, owner's bracket. How do you actually recover that? Because now that you're paid for the client. We'll talk about different types of general disbursements, billables, actuals, unit rates, mileage. What does the Law Society allow you to do? We'll talk about compliance, the most important aspect of disbursements. When you do disbursements, how compliant you should be, and what are some of the documents that you need to produce so that you can be compliant. And we will talk about what the expectations of the Law Society when it comes to disbursements. How do you ensure that you can maintain compliance with respect to that. So we'll first go through disbursements, like why you should do it and when you should do it and how you should do it and what you should record during disbursements, and then we'll talk about compliance. Okay. So what is disbursements? What is the meaning of business? First, let's look at the definition. Definition says that disbursement is an act of paying out or dispersing money, on behalf of a client. It has to be on behalf of a client. It's a cash expense or a dividend payment or some amount that a lawyer has to pay on behalf of a client. So it is not your office expense. Clearly, this is an expense that you're paying on behalf of your client. Now, by definition, because you're paying on behalf of your client, you have a couple of choices. If you have trust funds, which is money that he has already given you, you can use that directly to pay the disbursement. That's one of the best things to do. Accounting is very simple. You're paying straight from trust account, so it's very, very simple and easy. But situations may be such that you may not be able to use trust account and you've used other means to pay the disbursement, and you have to go through an entire procedure of recording it, invoicing it, making sure that your client is aware of it, and then you transfer funds from trust or he pays you for the disbursement, you recover the expense. In layman terms, disbursement is expenses incurred for your client by your law office. That's all it is. These are expenses very specifically incurred for a matter. So you cannot have disbursement without a matter. In accounting terms, you need to record that properly in the books so that you can balance them and you can show how it was spent, where it was spent, invoice properly and recover the expense. That's what the accounting view is all about. In Law Society's view, or auditor's term, it needs to be maintained in proper. The disbursement has to be maintained in proper books. Let's get to how to manage disbursement. Now that we know the definition of disbursement, what are some of the key steps that you need to take? Now, disbursement, as we explained, could be in trust or general. It could be in trust or general. It depends what decision you decided when the expense had to be incurred. The most important thing is record when the disbursement was paid and record how it was paid and what was the reason for the expense. Most of the problem in accounting, or anything like, in bookkeeping can be eliminated if the event was recorded when it happened, because it's in your memory. You exactly know the reason, you know the amount, you know the date, you know the party to which you was paid, you know the party on behalf of whom it was paid. So recording it at the time when it really happened is key. When you also record it, you want to record the client's name and the matter that the disbursement was related to. Disbursement is always related to a matter. Without a matter, there does not exist a disbursement. So recording the client's name and the matter to that disbursement was related is very important. If it was paid from general account, then there are some more things. You need to decide what portion of the disbursement that you actually incurred you want to invoice. Sometimes, it might be the exact same amount. Sometimes you might actually have a profit, or sometimes the client cannot afford the disbursement. You might take a loss, so you need to decide that. Always pre-bill, validate you're charging the client for disbursement, and then raise the invoice. Once you have raised the invoice, it's now time for you to get paid for the expense. If you have money in trust, recover it directly from trust. If you don't have money in trust, you will request your client to pay for it. So you have to record the invoice and the expense recovery. When the client actually pays you for that, or when you do the trust transfer, you need to record all of that. So if you look here in trust, there's only one event happening. In trust, money is already sitting in trust. When you pay a disbursement, you only record that. In general, you can clearly see there are several steps here. You record when the expense happened, you record the invoice, and then you record when the invoice was paid. That's the recovery portion. So all three events need to be recorded. So that's why the trust and general disbursements vary, because in trust there's only one event. In general, there are three events. Let's now talk about how did you spend the money. Generally, bookkeeping is all about recording the money, right? So if you follow the money, then recording becomes very simple. The first question that we ask is, why not pay disbursement straight off your trust account? When you do that, it's truly a very keep it simple process, because the accounting is very simple. Let's take an example. Let's say you had to pay court fee or some other kind of fees, and it's an actual. What you paid for that is what you're going to recover from the client. It's very easy to actually pay from the trust account. All you need to do is write a trust check for that amount and and just issue it, and you're done. So things like court fee or any other actuals, recording it directly from trust account makes a lot of sense. When you pay from trust accounts, there's nothing to recover because you already had his money, you used his funds to pay for it. Now, it's not your money after all. Trust is a liability account. You're holding the client's money in trust. You're absolutely eligible to transfer that money to pay disbursements for that account. And it reduces bookkeeping overhead by a huge amount, because you are only doing one recording, which is you're saying, hey, I paid this money on this date to this person from trust account. That's all you need to record in your matter. When you pay from your business credit card or general account, or sometimes even from your owner's pocket, your personal pocket account, there are several other things that you need to record, because there are three events that happen. First is recording the expense information with the date. You need to record that. Then record the amount including appropriate taxes. You don't have to record record anything separate in taxes and amount when it's trust account, because it's not your money. You don't care about the HST or the PST there. But when you're doing it for general, you need to separate the amount and the HST and record that. You have to record the method of payment, whether it was paid using credit card or e-transfer or a check. You need to record that. Record the matter and the client details. Very important, because the disbursement has to be assigned to that client. And also you need to record if the disbursements are paid from bank, credit card, or your personal pocket, or by someone else in the corporation. You need to record that, because you need to pay that person if he or she paid for this disbursement. So that's why the bookkeeping in general is a little bit more than the bookkeeping if you paid out of trust. When to recover a disbursement? Now, if it's trust, there's nothing to recover. It's basically his money and you used his funds to actually pay. If it is general, you cannot recover that disbursement that you paid and pay yourself before raising an invoice. Now, to raise an invoice, you need to record the expense information with the date of the expense. You need to record the amount that you want to invoice with appropriate taxes. And this is where it gets a little tricky, where you want to mark up or mark down sometimes based on how you think the client can pay for it. And you have to do this with proper tax effects to it. Once you have done that, you would pre-bill. You would make sure that you're happy with that invoice, and you would raise that invoice. When you raise that invoice, you would obviously send it to your client for review. Once you have done that, it's time for you to get paid. To get paid, you can either do a trust transfer if there's enough funds left in trust account to actually do that, or you're waiting for your client to write you a check or do an email transfer of pay so that you can deposit that money directly into the general account. Now, if it is paid by you or your personal money, it's not a corporation's money, or someone else in your company paid for it. Let's say your assistant that day happened to go to the court and you asked her to pay that. She basically used her own personal funds. Then you need to move that money to pay yourself or the third party. You need to put that into accounting as well. We'll walk you through some examples later on how you do those things. Make sure that you have all the ledgers, journals updated as per Law Society's guidelines. So, as you saw here, because the procedures are different between trust and general, you need to ensure that you follow proper Law Society's guidelines and you update the ledgers and journals. Now, all this is applicable if you're doing this manually, like you don't have an accounting software or you don't have some kind of help. Then these are the steps that you need to follow to ensure that when you're audited by a Law Society auditor, you can show them how these procedures were actually met. Let's now talk about, the ledgers that are needed to be reported in disbursement. Now, either trust or general, you need to report these ledgers. So during the audits, the disbursement ledgers for both trust and general are reviewed. Every transaction disbursed needs to be recorded in these ledgers. As you see here, for example, the transfer to Taylor is recorded here as a disbursement paid straight out of your trust account. Now if there was an invoice that was being paid and that 565 was a disbursement, that's recorded as well. So in the trust ledger, you directly record the fact that a disbursement was actually paid by that account. In general ledger, you need to split the disbursement into the amount of fee and the HST separately, so that or applicable taxes separately, so that you can show that and also show how the client actually paid for it. So this is what is expected in the ledgers. Like for example, in this particular example, obviously the $100 is a fee, but let's assume that $100 was a court fee, not a real legal fee. Then you would have recorded $100 here $13 as HST in the province of Ontario. And then when the client actually paid for it, the entire $113 that was paid on this account would be recorded, and the balance would be $0. Similarly, like, you know, if you had trust transfer to pay that, you would record at $500 here, $65 here. That would be the balance of $565. And then when you do a trust transfer to actually pay yourself, right, you would have recorded the $565. So these are the ledgers that the Law Society auditors are looking for when you do disbursements. Now, for journals, the story is you need to have 3 journals. You need to have a trust disbursement journal, you need to have a general receipt journal, and a general disbursement journal. All 3 things are looked at by the Law Society. So during audit, they will be reviewing these 3 things with respect to disbursements. The journals are recorded in a single type of activity. So that means you need to have the date. The most important one that the auditors really check for is the method of payment. You also have to have who it was paid to. Like, you know, for example, you can say Brampton Courthouse or, whatever institute that you are actually paying the disbursement to. You have to very clearly indicate the client, the matter, and the purpose of the payment. And then you have to record the amount itself. That's what needs to be recorded in the disbursement journal. Now, this is all, again, I'm telling this only when you do this manually. When you do this in software, all these documents are all generated by the fact that you actually do. Now, let's look at general receipt journal. In that one, you need to have the date. You need to have the receipt from where, that you know who paid for it, like how was it actually paid, like, you know, and all the description about the payment. And the amount, you know, that was received, and the method how it was received, like was it a bank draft or was it a check, like, you know, you need to clearly capture that in the general receipt journal, and that's where you would track the receipt. In the general disbursement journal, this is where you would indicate how you actually paid for the disbursement. Now, the examples here are more like, not disbursements for client, it's more like, you know, these ones are office expenses, but you know, here you would say, like, you know, check number 2 was returned to that. Amount was $200, what was the taxes associated, and what is the total paid. That's how you would have recorded general disbursement journal. If you have any questions, please don't hesitate to use the chat line. I'll be more than happy to answer that. The next compliant document that the Law Society is looking for is fee book. In the fee book, all the disbursements that were charged to the client need to be recorded. And appropriate taxes also need to be recorded. You need to say, like, you know, on this particular invoice, I had this much fees, this much disbursements, and that's my total HST. You need to record all 3 columns. Now, the following sample below does not show, I took this from the Law Society guidelines, but it does not show any disbursement, but that's the column that you have actually filled in. Why would you use a legal accounting software, instead of actually doing all these things manually? As you saw, there are several kinds of documents. You need to have these 2 ledgers. You need to track date, particulars, who it was, like expense, taxes. There are so many columnar information that you need to actually track when it comes to disbursements. If you look at the journals, they're very similar to ledgers, but it's again a duplicate of information that you need to capture. The date, the receipt from, amount. And so if you don't do this using software and you actually manage this using, Excel spreadsheets or some kind of, stuff, what happens is you're basically repetitively managing the same information again and again and again, and it could have a lot of errors, especially in the area of reconciliation, right? So that's why, and FIBO is a separate journal that you need, spreadsheet that you need to maintain to actually make sure that that's consistent as well. Now, when you look at all these things, it really gets hard for you to record all these events and maintain them. Now, when you use a legal accounting software, it's easy for you to record, and then recording this financial and you make it as close as possible to the bank, and by the process of reconciliation, you can even make sure that it is. And you maintain none of the about that we talked about. Let the software do the work, and you just follow the workflow, right? So the legal accounting software also brings you compliance, accountability. You can have analytics. Like, you can see how much money actually went on disbursements, how much did you recover, did you have a profit or a loss, or was it on actuals? You can find the whole thing. And at the end of the day, it saves you a lot of time. It's ease of use. So those are 4 basic pillars on which any legal accounting software is built on: compliance, accountability, analytics, and ease of use. And these are the biggest benefits of using a legal accounting software. So that kind of brings us to an end of the presentation. Let me just quickly go through it before we get into like a small demo, because this is very theoretical. I want to actually show it in a demo how you would actually do that. So we talked about the definition of disbursement. We talked about some of the key steps, and we'll keep these slides as we actually manage ourselves in the demo, and then we'll talk about how to keep it simple by praying it from trust. And we'll take a live example and walk through everything, okay? So what I'm going to do is I'm going to keep the presentation. We're going to use our software here, and I'll walk through each and every slide. First thing is, let's go by the definition. What is disbursements, and how do you actually record them? So for this purpose, I'm going to create a very simple client, right? Let's say, let's say his name is Sujan Feder. Let me create a matter for Sujan. And in this matter, what I'm going to do is I'm just going to manage disbursements. We'll not talk about legal fee, just follow through on disbursements and make sure we understand all the concepts. So let this be a family matter. Let's say it is Sujan versus Suja, right? And we'll make it a family matter and save. So by definition, disbursements have to be recorded in the matter. The reason why you have to record them in the matter is because, as we told you clearly here, disbursements are related to client expense. You will not be recording client expense anywhere else. So to record that, what we are going to show you now is we're going to show you that in the matter, that's where, we'll be actually allowing you to record it. Let me just quickly refresh this. Go to the matter. Here we are. And let me show you how to record the disbursement. So disbursements in our software or any other legal, I'm just using ours just for an example. You would be adding it to the matter. You'll click on here, and here are your options. Did you pay for it from trust account, or did you pay for it from general? And there are several types of disbursements that we talked about. So let's go to the different types of disbursements. There are billables, unit rates, mileage, travel time, recovery of expense with profits, both trust and general. We'll talk about each of that, okay? So what I'm going to do is, just for, this example, I'm going to assume a retainer. Let's say the client gave you a $500 retainer, right? And it was given on, let's say, the first of the month, January, right? This was the check number, and you applied it to this matter. So you have $500 here to use for this matter with both legal fee and disbursement. So in our presentation, we talked about the first step, which is, paying a disbursement straight out of your trust account. So what needs to be done is, when it was paid, you record the client's name, the matter, and some of the information related to the disbursement. Let's see what needs to be recorded. Let's say you paid from trust. The disbursement was a $50, you can say, court fee, and the check number that you wrote is that, right? and it was paid to City of Brampton. So you record the method of payment, the check number or whatever that method of payment required description, the real event, what happened, and you kind of say which account that you actually took the money from and hit the payments. So right now, I've only shown you one thing where the client, you receive money from the client and you pay $50 of disbursement. Let's look at the ledgers. So if I would look at the trust ledgers, you clearly see that it shows you the date. So let's look at the trust ledger here in comparison. You need to have the date, particulars, receipt, disbursement, and balance. So an accounting software, without you doing much, has captured all the requirements that the law society wants. The date, the reason, saying that it is a retainer, the check number, and the $500 and the balance in trust account. So it kind of captured that whole line item without you actually doing that. The second line item is today when the disbursement actually occurred for $50, bringing down the trust balance by $50 to $450. And the reason and the method of payment and why it was done is all captured here in particulars. Very similar here, like, transfer to Taylor. So this is a big advantage of using a software. Like, rather than you maintaining this in spreadsheet, like, if you really had to do this, you had to have a spreadsheet where you would have had, 5 columns, and that too for this particular Mr. Kirby and the, and the loan and all that information. But here, you saw for Sujan Feder in a single ledger view, I was able to bring the entire. And as you saw here, trust is very simple. Like, you only had one recording, of the disbursement, and immediately everything was accounted for. You had no problem, building this. And this is exactly what the law society is looking for. When they're looking for a trust ledger, they're looking for the fact that 500 came in, 50 was spent, and the balance was 450. That's exactly what they're looking for. Okay. Now, if you have to kind of edit this, you can go back, edit it, because maybe you made some mistake, like, this was not on first, it was on the 16th of January or something like that. You could always go back and edit it. And then when you actually now redo your ledgers, right, the ledger should indicate the change. So in this case, as you see now, 16th of January is when exact same information has been recorded. Everything is actually fine. Now let's look at general disbursement. So I'm going to go back here, and we're going to look at general disbursement. There are several types of disbursements, and we'll go through each of them in greater detail. The first one is what we call billables. This is on actuals. So when you say new disbursement paid from general, most accounting softwares will ask for two things. The top portion is what you are invoicing the client, and the bottom is how you actually paid for it. And you cannot recover the top portion till you actually invoice. In this case, I'm going to use, I'm going to use some fee. Let's say it's an application fee, right? And the amount was, I used $20. $260 is the applicable taxes. Now, if there's no tax exempt, you can just say this and then, mark it as no tax exempt. Or otherwise, you will say what it was. The bottom is how you paid for it. You can say, hey, I paid $20 as well. And, and it was paid on, let's say, on the 21st, right? And who was it paid to? You can say it was paid to, again, I'll use City of Ottawa, for example. And how did you pay for it? You can say, hey, we used our general account, right? And we basically actually wrote a check or a money order or a bank draft, and you can give that information and hit the save button, right? So this is how you record the expense for that client in the software. Now let's look at an expense ledger for that. So that would be but right now the general is still zero because you've not actually raised an invoice, so that's why the general is zero. The trust is still the same, but this particular entry that you put as an expense is actually recorded as an office expense. So let me show that to you. So if I would go under expense, under client expense, and these are expenses paid on behalf of the client, you see here the application fee on the 21st, the $20 for Sujan is actually recorded here, telling you that it was $20 has been recorded here, and appropriate HST payable has also been recorded. Okay. So now, if you actually do an expense book, I'm going to do an expense book for the month of January. Let me do that. That's the month of January. I'm going to download it. You will actually see that particular expense captured like the way the Law Society wants. Here it is. Application fee from Suja Feder, $20, the taxes, and that. So the Law Society is actually looking for an expense book, and we have captured that. Now going back, that is billable. Let's look at unit rate. Now what is unit rate? Unit rate can only be done in general. It can never be done in trust. Unit rates are basically like, photocopies, mileages, postages, stamps, similar kind of activity. So you click on add new disbursement and you'll say, mileages, and you can say, let's, for example, fax is a great example of unit rate. When you say fax, you're not giving the amount. You're saying, hey, I'm charging you 10 fax at $1.50, which is like $15, right? And in the bottom, you can say, hey, there was no expense because this is completely from my office. You could do that. Or that day, you happen to be at Staples Business Depot to do that, right? And you paid, let's say, $7 and taxes accordingly, and you used your credit card, right, to pay that. You could indicate that. You can say, hey, this was my credit card transaction details, and it was paid to Staples Business Depot. You could do that, right? Now, most likely faxes may not have any, expense, but, if they have, you can do that. Okay, let me show you another example where there's no expense. Like, for example, photocopies. You completely did photocopies inside your office. You can say photocopy charges, right? Again, it's now at 10 cents a photocopy, right? That's the rate. So you can say, hey, I'm charging you for 100 photocopies, right? $10, and that's your approximate taxes. And you say, hey, there's absolutely no expense at all. That's where you're reporting your expense. This is what you're charging your client. And you can hit the save button, and you will now see the disbursements will slowly keep bumping up. It's now become like you're charging the client total of $50.85 as disbursements. So clearly, as you see, you can have different kinds of disbursements. Billables are actuals. What you paid is what you're recovering. We talked about unit rate. Let's talk about mileage and travel time. Okay, so mileage is again similar. You can say mileage. I'm going to change this to mileage. And right now you're recording a kilometer. Let's say attended court, and you can say I traveled 60 kilometers and 40 cents. Most likely there's no expense for that, but sometimes you can put gas expense. If you really had a gas expense, you can put that as well. You can hit the save button. Going back to the example here, travel time is a disbursements too. So you can say, hey, on that day, my travel time, and travel time can be two things. It can be a legal accountant travel time or your assistant travel time, and you can have different measures there. So you can say, hey, the legal account is $200 per hour. The assistance is $100 per hour. You could do whatever, whichever one you're basically using. You can say, lawyer travel time, and you can say, hey, I traveled for an hour and 30 minutes, okay, and I'm charging him $50 per hour, right? No expense to report, of course, it's time, right? It's only a general expense. You could do it that way. As you see, I'm entering different kinds of disbursements, right? All from general. Let's now talk about recovery of expense. Kind of this. We already showed one example of application fee where, both sides were same. Let's say, you had another kind of a fee, an assignment fee, and you paid $30, and that was the appropriate taxes you want to charge the client. And there was absolutely no expense. There was no expense. You're going to leave this empty. Sometimes maybe it was actually $60, and the client cannot afford the entire $60, and you're only passing $30 of that. You could do that too. So basically the reported expense, it's all like you're reporting what happened, right? Like this is what really happened, and you could actually do that, right? Or if you paid for $60, you might have a surcharge, and you say, hey, you know what? Even though it's $60, I'm charging you $5 because for the assignment fee payment, like, you know, I had to put a tip or something like that. Like, so I'm charging you $5 extra, like, you know, because like I would like that to be on top of what was actually paid. So that's another thing that you can actually do. So that's why there are two types of expenses, like, you know, one where there's a profit margin, another there's a loss. So it can be a markup or a markdown, and that can only be done in general account, because when you do it from trust, it has to be on actuals. Okay. Let's talk about consultancy expenses. Those are also disbursements. So sometimes you might be outsourcing the work, and maybe the court is far off and you are not able to go there. You got someone else to attend that court. You can put that as well. You can say new disbursements, and you can say third-party consultancy, and you can say, you know, attended court. It's, you know, maybe that company or the person, the lawyer or paralegal, whoever did the work for you, charged you $75. You can say, hey, that's what they charged me, and that was by John's law office, right? It was outsourced to them, right? And they did the work for me, and I wrote this check to John, right? And it was from my general account, and we returned this check. So here what you're saying is this is a consultancy disbursement for $75. That's what John's law office charged me, and I'm just passing that expense to you, right? Like you're just indicating that. So as you saw here, like, you know, we've now recorded so many types of disbursements. Like, okay, let's go back. So we showed you how to do billables, which are actuals. What you spent is what you did, and that can be both trust and general. Unit rates are only general. We showed you expenses like faxes, photocopies. Mileage is, you know, how much kilometers you traveled. You can charge that as disbursement. And then there's travel time, which is basically the time that you spend. Then we showed you the recovery of expense ones, which can be both trust and general. And profit margins can only be on general. Profit margins are, you know, markups or markdowns can only be in general. And consultancy can be both trust and general, but we showed you the general this one. But if there's a margin on consultancy, then it can only be in general too. So far we walked you through all these ones. Now, all you've done here is just mark them. By no means that you can pay yourself. You cannot do that till you actually raise an invoice. So let me actually pre-bill, and let's walk through how the pre-bill is going to look like. Clearly, you see all your disbursements are here. I'm going to change the theme a little bit so that we can understand a little better. It's a little busy. There you go. Okay, so clearly, as you see here, you can see the application fee, the faxes, the photocopies, you know, the attending of the court. This one is you doing it, like, you know, you know, where you are charging mileage. Then this is the lawyer travel time. That's assignment fee. This was the consultation one that you actually did. So everything is very clearly laid out in the invoice. Unless you do the invoice, you cannot be basically, you know, looking forward to transfer this money and recover this. So let me just actually raise an invoice, right? I'm going to raise an invoice. And the minute I raise the invoice, right, the recovery procedure can actually start. Like, you know, you will see now, like the minute I raise the invoice, the ledgers will be there for me to actually indicate the kinds of disbursement. So let's go to that. I'm going to click on the question mark, and let's look at the general ledgers. When we look at the general ledgers, clearly what the law society is looking for, let me go to that, is they're looking for, you know, date, particulars, the expense, and then the taxes and the account and the owed, right? So we clearly see now that the date, the particulars, the expense, right, like, you know, it's right here, and the balances are right here, right? It's very clear. Now, if I would actually do a ledger, let me actually do a ledger. Let's say document generation, ledger, general. I'm just going to do for Sujan rather than everybody, right? Like that way we understand our example a lot more clearly. Sujan, you download it. You'll now see that you have to split your expense into legal fee and the tax portion so that the law society can very clearly understand the split. Very important that you do that. Okay, and that's what they're saying here, that you have to split the fee and the HST portion to indicate in your ledger. Okay. So now going back, if I actually look at my general account, I see I've done so much, and that's the balance that I can recover. So when I hit the question mark, it tells me I have money sitting in my trust account, so I can transfer it to pay for all the disbursements that I've incurred here. So you can basically say, hey, okay, assignment fee, I want to pay myself. This is the attendance of the court, I want to pay that. And this one is the travel time, I want to pay for that. That's my consultation, I want to get paid for that. That's my photocopies, that's my faxes, and that's my application fees. So, you choose all of that. $302 is what you're going to get paid, right? And you're transferring money from your trust account to a general account, right? And you're doing an electronic fund transfer. Obviously, you can put your fund transfer requisition number and hit the transfer button, and you can download Form 9A because you just did the whole event. And you're pretty much there. See, it clearly lays out what was the event, everything. You just have to print this one and sign. If I go back to my ledgers, right, clearly now see that all the individual transfers that happened are all shown here, and it shows you a balance of $0. So clearly you saw that my ledger had all the activities. Now, there are 3 other documents, which are the journals. So let's go and have a look at that. So the journals are all here. If the easiest way is I just go and hit compliance. When I go and hit compliance, I can look at general receipt journal, right? I can just say, hey, show me from the 1st of the month all the way till today. So let me do that. So from January 1st till today. And if I actually download it, this will show you all the payments that you got from Sujan. There you go. So Sujan Ferrer, all the electronic fund, the payments that you made for your trust transfer, they're all captured here very clearly. Okay. Now, similarly, if you had general disbursements, that should capture all what you paid out, right? All the payments will be all transferred here. So let me look at Sujan. If you look here, all SF, see the application fee that was paid on the 21st. If I would search for SF minus, I can see the application fee, the attending of the court, the fax, the assignment fee. It's all here. Okay, so it's all there. And now it gives you a very nice analytics. Hey, this is the expense on your client, your stationery, you spend this much, office supplies, other fees, miscellaneous. It shows you like a nice view of your disbursement journals, right? It's also an analytical view. Finally, it comes to, we looked at these, let's look at the fee book. The fee book, I'm just going to do a download, and it should show me for today, I have all my disbursements that I got paid for, right? The $75 travel time, application fee, very nicely split between fees and HST. That split is very important that you showcase that, and it's very, very, very nicely shown. Some of the things like court fee for which there's no HST, the HST field is left empty. So we kind of have shown in a single panel all your compliance documents that you need for disbursements as part of this month. So when you actually do your reconciliation for the month, you will finish the reconciliations and just come back here and download all your compliance documents, and you will be done with your disbursements. So to summarize, before we kind of go back, we showed you several types of disbursements here. We showed you how to pay directly from trust account. We showed you, billable types. We showed you unit rates, like photocopies and faxes. We showed you mileage, travel time. We also showed you markups and markdowns, and we showed you consultancy disbursements. This kind of covers the topic of disbursements. What I'm going to do right now is I'm going to open the floor for questions, and if there are any questions, I would take that. The first question that I've been asked is, let's say there was a disbursement paid by owner's pocket, by you. How would you recover that? That's a great question. Let's talk about that. So what I'm going to do here is I'm going to do an owner's pocket disbursement. Let's say, it's I'm going to say a courier cost, right? I'll make it easy, $20 with no tax, so that way it's easy, right? $20, no tax. And here, rather than mark it as a bank payment, you would mark it as owner's pocket, right? You can also have other pockets, like for example, TJ could have its own pocket, Amanda could have her own pocket. You could have several pocket accounts, but I'm just going to mark this one as owner's pocket. That's basically, money that you paid. You kind of indicated that. Let's hit the save button. So what you would now do is, first thing, you have to raise an invoice to get paid for this, right? So you would say, document generation invoice complete. Let me skip the preview for now. Let me do an invoice. The $20 has been now raised as an invoice to the client. You still haven't paid the corporation, not yourself. So that's your $20 courier cost that you raised as an invoice. The next step, obviously, is to get paid. So you'll say click here, and you will click on the transfer button, and you will take the money from trust account and pay yourself. You'll say, hey, this is the money that I'm taking from trust account and transferring it to my general account. So you've done this much. So basically, you put the disbursement as owner's pocket, raised an invoice, and you paid yourself. So the money is in your bank account. How do you pay the owner's pocket? You can go into the owner's pocket account, and you will see that there's a $20, withdrawal that was being made. What you have to do is action, transfer. You have bank transfer. Bank transfer is you withdraw from your bank account $20 and you move it to your owner's pocket account. You'll say, hey, I'm writing a check. So this is a check that, the company has written to transfer money from owner's pocket to yourself. There you go. So now the money is being paid. Now you could have given a proper reason. You can say paying owner's pocket account for disbursement for Sujan. Right? You could have done that, and then what will happen is in your accounting, you would actually see the proper description, how it was done and all that stuff. So that's the last way how you would pay yourself. Now, if that was another client, another person in the firm that paid for it, you would now put it under her pocket account, and similarly do it. You can also use accounts payable as a methodology to get that done as well. Okay. Any other questions? Let me see. Okay, the next question that I've been asked is, what about consultancy expense? Oh, okay. We showed consultancy expense in the example, disbursements too. When you are actually outsourcing your work to a firm outside your corporation, it's consultancy expense. So you again, in your accounts, under your chart of accounts, under expense, under consultancy, you can have all your consultants, like for example, Jim Brown, the interpreter, could be there. Eliani, outsourced paralegal company, John's Law Office, Megan Consultants. You could create all these accounts here, right? And I'm going to choose that John's Law Office example that I just used here. You know, we attended the court and John was paid $75. It was recorded here. So if I go here and say, add new disbursements, third-party consultancy, right? And let's say consultancy expense, and you can put here, $40 with taxes, and you can put again $40 with taxes, and then you could choose here. Say, hey, this was for consultancy expense for translation, right? When you do that, and you say how you paid for it, right? You can say you wrote a money order for that much, and hit the save button. You'll now see that in the Jim's account, that would be there. So if I go to Jim Interpreter account, the $40 expense is actually sitting there. So it will be reported as part of your expense book, as a consultancy expense. So that's how you record the consultancy. Now the rest of the process of recovery is exactly the same. You would raise the invoice, you would collect the funds from your trust or get that paid by general, and the rest would follow from there. So that's the question on consultancy expense. Let's now kind of give ourselves a final summary. We touched on the legal accounting software part of it. Because you're recording the events as it happened, when it happened, it's very easy. And as you clearly saw, I did not maintain any journals or fee books or ledgers. Those were all generated documents, in a legal accounting software. And you saw how compliant things were, how accountable, we made it. And we didn't talk about analytics. So let's quickly jump on analytics. If I would go to analytics, you can say, hey, I want to do expense chart by category. And let's do it from the first of, let's just do it for the year, right? And you would now see that John's Law Office was the number one, Jim's Interpreter was the second, the client expenses were there, and office supplies and everything was there, right? What's the name of today's webinar? It is Disbursements Demystified. Disbursements Demystified. Okay? So now let's look at analytics in a little bit of a greater detail. You can look at it in a bar chart or a pie chart. You can do that. So in the pie chart, you clearly see that, the largest chunk was actually taken by the LNTJ LSO file. All the other ones, were much smaller than that. It kind of shows you that. And you can see the same thing in a bar chart or a category chart. Okay, so you could look at it from whatever way you want. And you can even sort them, right, in the order, in percentages, or, the name. So that's analytics for you for disbursements. You could actually do it by clients. If you do it by clients, you would know which client was taking the maximum disbursement. The CPD is 1 hour, and it is professional hours. We don't offer any kind of substantial hours. So again here, I'm going to zoom out. You saw the business corporate expense, Clark, Sujan Federer, how much he got, right? And then you can view that as a bar, or you can view that as a pie. It clearly shows you who's the largest one and who are all the other smaller ones. Sujan was about 8.3%. You can see, you spend a lot of expense on Sujan Federer's matter. So that's analytics for you. Now, what are the advantages of analytics? That's how you know the health of the company. You would not know the health of the company by just data. Data is useless if it's not analyzed to its fullest, right? Clearly now by analyzing, you found out different pockets of areas where you're actually spending. You clearly see here, most of the other clients, your disbursements have been much lower, but for Sujan and Ken Clark's, it's been much higher. How did you find that? It's all by doing analytics. Otherwise you would not find and this one gives you a whole view. It tells you hey, your business and corporate expense by far is the largest on all these clients are this much. It gives you a holistic view of your expense for the month. It kind of tells you hey, I spent about closer to $3,000, of expense this month, and this is how all the expenses have gone. If you're looking at your bottom line of your business, and understanding analytics becomes very, 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 very critical. right? And you can do that from your cell phone. You can do this from, uLaw in the Analytics tab. You don't have to do it during your work hours. You can do it in, off hours. And the last pillar is ease of use. You clearly saw, all I was doing in the whole thing was just going into the Myer and putting different kinds of disbursements, which I need to do anyway to raise an invoice. So I was not doing anything special in an accounting software to do this. You just do it inside to raise an invoice, and the rest of the accounting would automatically happen. And this is the fundamental difference between an accounting software and practice management software. There are a lot of practice management softwares out there, and when you look at them, they don't handle disbursements properly to the law society's guidelines. Just recording by alone is not enough. Making sure that the whole cycle is met, which is if it is general, it's a 3-cycle process. If it's an owner's pocket, it's a 4-cycle process. If it's trust, it's a 1-step process. Making sure that all the journals and the ledgers are actually done. Only legal accounting softwares can do that. And the Law Society is very clear on them, rather than using spreadsheets or OneWrite or even accounting softwares, right? There are accounting softwares like QuickBooks and Xero, which don't do this aspect of compliance of the Law Society. And that's why when you are choosing legal accounting software, make sure that these pillars are properly met and you're addressing the need of your firm and not just buying software for the sake of buying software. With this, I want to bring an end to today's presentation. If you have any other questions, I'd be more than happy to answer them. We kind of answered the questions. There were questions about owner's pocket, and there were questions about consultancy expense. I'll leave you with this last chart. Always remember, disbursements can be of 2 types, trust or general, and this single chart kind of summarizes, what you can kind of do. So I'll hang around for another minute or so. If not, thank you everybody for participating. Please don't forget to go back to your email and give us your feedback and your attendance. Very important. This is an LSO certified CPD, 1 hour of CPD hours. So please go ahead and give your attendance. And if you have any feedback, I'd be more than happy to, address it in the chat window. Or if there's any questions, don't forget to ask them as well. Thank you.